Savita, what's the counterpoint to that?
Yeah, I mean, it's not just the consumer, it's also the corporate sector. And I would argue that, maybe the consumer is not as strong as they were, right after they got their fiscal stimulus and hadn't spent any money. But today, what we're seeing in our credit card data is that spending is still quite healthy relative to inflationary pressures. We are seeing some pressure in sort of the lower income cohort, but I think overall, what we're seeing is an environment where cash balances are actually higher than they typically are coming out of a recession, which, we had a recession last year, and we actually have seen less leverage taken by corporates and consumers over this cycle. And I think what's also interesting, and this is not necessarily true, a benefit to the market, but it could be a benefit to the U.S. economy, is the idea that companies are actually, kind of in a position where they really need to spend capital, and they have capital. So one of the things that never fails to surprise me is that our CapEx guidance ratio continues to be above trend, despite the fact that companies are guiding lower on earnings expectations, et cetera. So look, I'm not an uber bull. I think there are lots of problems with this market. We are underweight high growth tech. I think there are pockets of the market that you still want to avoid. I think we're going through a massive regime change where the pressures are inflation, rising interest rates, energy prices at levels that we haven't seen in quite a while. And these are probably stickier than they have been in prior cycles. But I do think that equities offer inflation protection and cash return, and I think those are the two characteristics where I would agree with my colleague here that cash return or cash allocation and inflation protection are paramount. Where can you get those things? Well, a lot of equities have them. Energy, financials, even healthcare staples. These are areas of the market that are less susceptible to the vagaries and the negative impacts of inflation, but can actually benefit from a pickup in inflation and are relatively healthy and paying healthy dividends relative to fixed income and other parts of the capital spectrum. Where I wouldn't go is bonds. I still think that bonds are in a bear market.